Hey, what's up guys? John here. Florida's housing market has 1.7 million vacant homes. 17.13% of all homes in Florida are completely vacant. This mainly consists of retirees, people that are, investing, trying to buy their second home, getting a house here for high season. They come for a few months a year. But there's so many vacant homes in Florida, but there's so many curveballs coming to this market as well that we have to really look at to get a clear indication of what the future of Florida's real estate and housing market will look like. In this video, I'm going to break it down for you so you can get a clear idea as to what happens next in this market. Before I do, today's video is sponsored by GreatCreditFast.com. That's GreatCreditFast.com. It's my credit repair company. If you need help fixing your credit, you want to position yourself for success during the greatest wealth transfer of all time, go to GreatCreditFast.com. We'd love to help you. Now take a look at this. So rising property insurance is a major issue. In fact, prospective homeowners in Florida are being priced out as homeowners now grapple with a 100% rise in insurance since 2020. So what you're starting to see here is costs go through the roof. In fact, I warned about this September 5th, 2021, saying that insurance companies are going to start calling this collateral risk, right? And that it's going to get harder to get a loan, and it's going to get harder just in general in Florida. After that video, we had situations like Fort Myers, we had situations like Fort Lauderdale flood, the Miami building collapse, and a couple other small scenarios that have unfolded that have cost insurance companies many, many, many billions of dollars that they're pushing their cost directly onto the consumer. And so what is happening? Insurance companies are choosing either to leave the state or increase rates or go out of business, right? In fact, I referenced this article. This is from Glenn Kelman, the CEO of Redfin for the last 15 years. And he said this about a year and a half ago, warning that what we're going to start to see here is major losses in the state of Florida. He said, I think that climate is going to be factored into how people think about housing. It hasn't happened yet. The only people who have figured it out are the actuaries, which are the insurance companies. The people who have to calculate the cost of insuring these properties. Increasingly, it's going to get harder to get insurance. It's going to get harder to get a loan for these properties because the lenders are going to see the writing on the wall that it's collateral risk. Now, this article, people buying homes in Florida and flood-prone coast will likely have trouble selling in the future. Now, he goes on to say the insurers, the lenders, and the appraisers, everyone is stepping back from these coastal properties because they are so vulnerable to superstorms that are becoming increasingly common. Coleman said in January's podcast with Barron's, adding that many prospective buyers cannot afford the housing costs that have come with living in these risky areas. Now, someone sent me a video yesterday of a lady who is now selling her property in Florida. She was fortunate enough to pay all cash. It was a $150,000 property. It was a fixer-upper. She seemed like a very humble, nice lady. She, bought a really good real estate deal, and she sold it, and then she rolled her profits into this fixer-upper in Florida. And this property, she goes down and breaks down her expenses and her cost. And when she does this, she finishes by saying, this is why I have to leave the state of Florida. I can't afford to live here. And this is coming from someone that doesn't have a mortgage. So when you look at the everyday consumer in Florida, you have to ask yourself, how can they afford to stay? Her property taxes has, jumped 21% in 3 years, 21%. Her car insurance jumped 67% in the last 3 years. Her utilities have jumped 11% last year. And her food cost, like everyone else's, has jumped as well. Her food costs, 11.8%, have increased. So, she's calculating her costs. She's looking at this, saying, I simply just can't afford to live here. But look at the average consumer in Florida, $61,000 income. So they're making $5,000 a month, right? Give or take $5,000 a month. And we have 62% of all mortgages that have an interest rate below 4%. So how does this kind of pan out? When you had a massive bull run on housing that we've seen the last couple years with record high home prices. I mean, some markets have jumped 80% over the last 3 years. And so what happened? People overpaid for properties. They locked in these low rates. Now rates are going through the roof. And it looks like Jerome Powell saying that rates aren't going to come down for a couple of years. So how is this going to play out? Well, this is what's going to happen. What we're going to start to see here is we are going to see people not being able to sell their properties. They're not going to have equity in their properties to be able to leave. And so it becomes these golden handcuffs where people, have this 4% mortgage or this 3% mortgage, but they can't refinance. They can't afford to sell the property. I mean, could they rent it? Sure, but they're going to have rising costs with it. And so it brings me back to this point here. When you have 1.7 million vacant homes, and a lot of people planned to buy these properties as a long-term investment or a retirement play, you have a situation where people are going to ask themselves this simple question: what do I do? Do I sell my primary residence and move to Florida full time? Do I sell the property in Florida and remain in my primary residence, or do I rent out the property in Florida? Right? But you're going to have, out of those 1.7 million, a large percentage of those people that are going to have to ask themselves that question very, very soon. And with increased insurance rates and increased mortgage costs, they're likely going to get less money than they could have a few years ago. So you're probably going to have more and more and more desperate sellers and people in desperate situations in the state of Florida. This kind of reminds me, Florida and Las Vegas are very kind of like boom bust. Things are either really good or really bad. I think Florida is going to be walking through this situation again. 62% of all mortgages below 4%, they're trapped. And 2 more insurance companies scaling back coverage in Florida. And these aren't like Jack's Insurance and Sally's Insurance, these little mom and pop shops. No, we're talking about companies like Farmers and AIG are scaling back coverage. It says over the past 18 months, 16 property insurance companies have decided to stop writing new business to new homeowners in Florida. And they go on to say that Florida and California will need to offer state-backed reinsurance so that insurance can issue actuarially sound policies. Now, state-backed insurance might sound great for some people. They might like that idea. Maybe they save 5 or 10% initially. But when you have state-backed insurance, the state, in my opinion, they form a type of authority over your property. Because if they are able to undercut other insurance companies and offer a better rate, then they're going to push competition out of the market, allowing them to form a monopoly, which isn't good for anyone except for them. And so when we're walking into a situation where people are asking for state-backed insurance, I don't think it's going to be a situation that's going to be great for everyone in the long run. Clark suggests shopping for insurance through an independent agent, and you'll get quotes for high deductibles, the highest your mortgage company will allow you to take. You're eliminating the insurer and what you'll refer to as a nuisance claim. This is crazy. Even utility bills jump $492 in a single year. So looking at the fundamentals, looking at what's really going on here, and looking at the hype and the mania that's been Florida the last couple of years, people moved here from everywhere. I'm one of these people. I moved here in late 2020, bought a condo in Florida, bought a place here, and it's been great. It's been fine. I've enjoyed Florida. I've had a really good time here. Enjoyed no income tax and everything that Florida's had to offer. It's been amazing for us. But looking at it, a lot of people moved here. A lot of people moved to Florida, and they did so because where they lived before just didn't, it didn't either align with their lifestyle, it didn't align with what was happening, it didn't align with, what made sense at the time. So people all relocated. So when you have a situation where Florida was getting 1,000, 1,200, 1,300 people moving here a day, a lot of these people buying these properties, paying cash, what are you going to have here? You're going to have a situation where people, they're going to either self-insure, and if they self-insure, then they're going to be able to avoid a lot of this. But a lot of people that are, sitting in these huge mortgages, that are the mortgages greater than the value of the property, these people are kind of stuck. So I think what we're going to see here is a massive wealth transfer in the state of Florida. I think what we're going to start to see is investors start to pounce like never before, because they're going to be able to pay all cash and avoid the insurance and be able to self-insure. We're going to start to see all of these situations that are going to change. Florida, many years ago was the place that people could, they could come here and buy a house for $200,000, and it was cheaper on a monthly basis to live in Florida than it was to rent a basic apartment, elsewhere. Florida was an extremely affordable place, and it was a great place for everybody. But now it's, I think, going to be the land of the rich. It's going to be the land of the people that are making, $500,000, $1 million a year. Now, this isn't going to apply to everywhere. I think most markets in Florida are going to get hit really, really hard. But I think other markets, such as West Palm Beach, along the coast, I'm talking about areas where people are making, $500,000, $1 million plus. These areas are going to do fine because I believe a lot of these people are going to be able to, withstand a lot of these rising costs. But everybody else looking at this, I don't see how, if you're making $50,000, $60,000 a year, you're going to be able to offset rising food costs, insurance basically doubling, utilities going up. I mean, it doesn't make any sense to me. What do you think about this entire situation? How do you see this whole scenario playing out? Do you think that we're going to see Florida, their housing market completely pop? To me, that looks like it's going to be the future, and I would bet anything that over the next 2 to 3 years, we're going to see insurance rates continue to skyrocket every single month. HOA is continuing to skyrocket. All of these new costs continuing to get out of control in Florida. And I don't think consumers are going to be able to hold on much longer. Drop below. Let's have a conversation about this. Add me on Instagram for other content I won't post here. And if you need help fixing your credit, we'd love to help you at greatcreditfast.com. That's greatcreditfast.com. Catch you guys in the next one.